Hello, how do you analyze stocks for swing trading if you are using long option long swing trading strategy? You'll have your daily chart open. You can use either 1 year daily chart or maximum daily chart. We are going to use maximum daily chart, and we are using Think of Swim platform. If you have Swab, if you have account with Swab, you'll be able to access Think of Swim platform for free to analyze your chart. So we have our watch list open, and you can open yours as well, and we are going to analyze this portion of the watch list to give you an example of how we analyze stocks using a long option and swing trading strategy. So TJX is the next one to analyze, and we have our long option lines that we like to buy at. They are the support lines passing by the valleys of the mountain that we like to buy at. We like to wait for the price to fall back on it, and when they start making higher lows around that area, we'll buy at the first or second green bar after a pullback. For TJS, is a pullback to a trend line higher than where we like to buy. Therefore, we are not going to get in. It's working on the upper side of the mountain, and we are just going to let it be. It's still going up. Yesterday, the price went up though. And that is the green bar. The next one is TMUS. TMUS, we have three trend lines that we like to buy at either one of those three. That the one we colored in purple, it went up and is pulling back, but it has not reached any one of those trend lines yet. Yesterday the price went up. The next one is TRY. So TRY, we like to buy at this trend line, and right now is nowhere near it. Is resting at this trend line, which is a previous support line as well, another previous support line, and a resistance line somewhere here. The next one is TRV, and TRV, we purchased it this year at this trend line, and we have two selected to buy at any of the two. We purchased it, the price dropped and start going up from there. Yesterday the price pulled back. There was earning day that day, and that just shows you that we do not really take that into consideration when is the next earning to decide if we'll buy or if we'll sell or not. At least at this point I'm not doing that. So because there are two things that can happen during earning time. It'll either go up or it'll either go down. If it's going to influence it, you see, it'll gap up. It gap up here, just like it could gap down. And you can see it here as well. So it goes either way. So you can choose to go to keep it through, to ignore the earning or not. But trying to ignore it sometimes and not ignore it some other times, you may not find yourself in the right side of the because you just don't know the right side of the probability each time. Does that make sense? So if you are going to hold it through earning, if that's what happened, sometimes it might gap down, pull you down. Sometimes it might gap up. But if sometimes you are avoiding it intentionally and sometimes you are not avoiding it intentionally, you don't want to find yourself twice in the situation where it will gap down on you. If it gap up on you twice, that's great, but it could do the reverse as well. So I just try to ignore it to see if that will be fine. Again, by practicing, you will know what works for you. So we bought it right not too long before that earning, and we'll just see how it's going to work. If it's going to turn around and pull back to this, or if it's going to, do that there and just continue, we will see. The next one is TSCO. at least we might earn some dividend. Or now, depending on when you had to have it in the portfolio for a while, for some time before that a dividend payment will take effect. In fact, it's earning. That one was earning. It's not dividend. Dividend happened before that. If we go back, I think this is dividend. It happened before we bought it, and this is earning time. So TSCO might be the next one. We have this trend line that we like to buy at, but right now is going up. The next one is TYL. TYL, we like to buy at this trend line, but right now is far away from it. The next one is URI. So URI, we like to buy at either one of those trend lines, but we have it in the portfolio. We bought it some time ago. It pulled back on us and started going up. So it pulled back, but it didn't come down to this trend line. It rested at a previous support line, which coincided with a previous a peak of a mountain, or it is a resistant line that became a support line couple times, and it's continue going up from there. So if it passed where we bought it, we'll be able to sell it for the profit. So the next one is V. We like to buy V at either one of those purple trend lines. Right now is following this trend line and going up. It's not done designing this upside of the mountain yet. The next one is WAB. WAB has been in our portfolio for a while, and then we sold it this week. So we bought it at this short trend line in November. 2 months later it became positive and we sold it. So we bought it, it pulled back on us, but it didn't reach the trend line that we like to buy at next time. It pulled back, find a support somewhere here, which is the same as this support area, and then went up from there and reached a high, and we sold it. We have a narrow there that point down to the price bar where we sold it, and this one point at where we bought it. So it took about 2 months after it dropped, the price dropped, for that to go higher than where we bought it, for us to sell it for a profit. A small profit, but a profit nonetheless. WM, it just take patience. If you are swing trading a good stocks, but you bought it at the wrong side of the chart and the price drop, it's okay to just let it be in your portfolio until it becomes positive and you sell it. Yes, you'll freeze your capital that you used to purchase it. You'll freeze it in that stock by doing so, but at least you are not locking in some losses. Some might argue that it is a loss because you could have sold it to minimize your loss and use that capital to trade other stocks and make profits, which will be true if everything being equal. You are going to make profit on those future trades, but there is a chance you might lose money on those trades as well. So just let it be in the portfolio if you don't need the money, and if it pays some dividend, it might pay you few cents or so, but can just give you a reference point to know what you did wrong and how to improve it. And when it becomes positive, you just sell it and lock it in. But it's just the strategy that works for me. So you just have to find the one that works for you as well. WM is this in the same boat as WAB, but not quite for us to sell it. So we bought it at a shorter trend line. It pulled back to use, a similar support line as a support, and went up from there. So yesterday the price pulled back. So we are just going to wait for that to do its things until it goes back up, and when it's positive we'll be able to sell it. Again, we bought it probably in December, so a month ago, and has been in the portfolio for that time frame, waiting to become positive. WMT, Walmart, we like to buy at either one of those two trend lines, if not three, but right now it's going up following this trend line here. So it's nowhere down, building this side of the mountain to start climbing down. So we are just going to keep observing it and not buy any. WSO, we like to buy at those two trend lines, but we have some in our portfolio that we purchase it, and then it pulled back to this trend line, make higher lows there. Yesterday was a pullback, but it seems to be resting at this trend line. So it could be a good entry point, but because we have some in our portfolio, we are not going to buy more. We are just going to wait for that to turn around. When it's ready to start climbing up, we'll buy it when it becomes positive. So this concludes how we analyze this portion of our watch list of stocks for swing trading using our long option and swing trading strategy. We have the red bar and the green bar on the chart. The red bar just means that the price dropped that day. The ending price, the price at the end of the day was lower than the price in the morning when the markets open. So the price dropped. The green bar on the chart just means the evening price was higher than the morning price. The price went up that day. As a swing trader, you can trade on a daily chart. You analyze the chart using daily chart. You trade and you buy and you sell using daily chart for your analysis and your entry point. So it's good to have a watch list of stocks that you analyze on a daily basis. Since if you use daily chart, you can analyze it on a daily basis to see one more puzzle that got added to the pattern, to see if you can decipher what kind of pattern the price is drawing to you, for you to see clearly if where you want to enter is still the right position for you to enter, or if you need to modify because you can see the pattern better and you want to move your trend line up, or you want to move your trend line down, and choose another entry point line. Since we are buying at the support line, choose a different support line or different uptrend line, whether one up or one below, and so forth. Now using indicator, but just using chart and trend lines, you can decide where you want to buy, where you want to sell, and when you reach the trend line that you like to buy, after a few higher lows, you can buy at the first or second green bar that follow a pullback. And once you buy, you can start thinking about where you want to sell. Because you analyze the chart on a daily basis, you don't need to set a limit price to sell and set the deadline as good until cancel, which is like 60 days. You don't need to do that. You can just analyze the stocks on a daily basis and check your account on a daily basis as well to see what is positive in your account, and then you check the chart to see those stocks that are positive in your account, where they are, to see if you want to sell them or not. And you can target the next high point to sell, or 10% in average, higher or lower, depend on you can just depend on the chart where you enter the trade and your risk tolerance level as well. Even small profit that you want to lock in is good. Just know that with the long option and swing trading strategy, if you're getting well at the base of the mountain, it's going to be making small highs along the pathway. So getting out too quickly it will take a while before it will come back down again to the trend that you like to buy at. For instance, for this one, it started at around that area. When it went up, it didn't come down to a climb. It stayed up a little bit for a while before it came down to it. Does that make sense? So getting out too quickly, if you want to buy it at this trend, it will take a while for you to get back in around this area. So that's something to consider as well. But don't stay in too long aiming to get the maximum profits possible. Maybe if you're a perfectionist, you might aim for that, but it's not what we are doing. But again, your strategy might be different from mine. Just lock in some profit so that you do not lose it all. Because if you have it all the way aiming for the maximum profit possible, and then you pull back because it's done making those mountain peak and pull back, you could easily lose a big portion of the profit that you could have locked a good amount in to begin with. So therefore, it's okay to leave some money on the table. The principle is just to lock in some profit. Even if that's $1 profit, it's $1 more than you have in the account that you started with. So lock in some profits and just wait to get back in again. And little by little, you will improve the strategy you are using. You will customize it to fit your risk tolerance and to impart to it some tips that you learn along the way through your own experience. And just tailor that strategy to fit who you are, your personality trait, your risk tolerance, and to help you reach your financial goal that you are aiming for. Thank you. Just start small. Even that just one share of a stocks that you purchase, that is good. 10% of it, if we take this stock WSO as an example, is almost $500. So that's $50 profit right there. So when it's $550, you sell, assuming that you bought it somewhere around $500, $550, you sell it, that's $50 you lock in from that one share of stocks. So yeah, even if that's just one share of stocks, or if that's just $300 per trade, or even that's $100 per trade, depending on how much the stocks is selling. Walmart is $94 or so, less than $100. So yes, even though they are large stocks, you can find some that are less than $100. So you can start small and grow your account from there. And don't underestimate the power of $1. If you have $1 profit and it's good enough for you to pay brokerage fees and still have some profit left, that it will increase your account few cents higher than what you start with. Keep in mind that if you are trying to buy something and you are few cents short, you won't be able to pay for it. So therefore, every single dollar counts. Thank you. We thank you very much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and inasub.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. For more on how you can create your own watch list of stocks that you can have to analyze and swing trade from, please check the description for playlist links related to the watch list videos. Thank you.